Our next guest says next year should present even more opportunity. Mithra Warrier is Citi North America's head of capital introduction. She's here at Post 9. Good to see you.
Great to be here.
You know, we're near the end of a year when the S&P 500 is up 25%. Do people not come to you and say, look, I could have owned that for a couple of basis points, and why do I need to hedge? Why do I need some complex strategies out there?
Yeah, 2024 has been a good year for hedge fund performance, and not just because the market has been up. If you remember, there was a fair amount of volatility in the summer and a ton of uncertainty leading to the election. If you think there's going to be continued macro uncertainty, if you think there's going to be geopolitical uncertainty, if you think there's going to be rates uncertainty, and if you think there's going to be fundamentals that are back in play, you want to be hedged. And what's interesting is post the election, our analytics show that gross leverage in the system among hedge funds is at 20-month highs. Net leverage is also up, but not quite as high, which tells us that shorts are active.
So you think shorts are active, or did they come into this period maybe just a little bit defensive and they haven't caught up?
I think it's a mix of both. One thing that we noticed, if you look at TMT, for example, our securities lending desk noted that last week, for the third week among four of the 4 prior weeks, TMT was the most shorted sector. And the view there is if you have to price in the impact of potential tariffs, potential AI regulation, and again, rates, you now have an environment where there's going to be winners and losers. And that's what hedge funds really do, is that stock picking and differentiating between the winners and the losers. So there is that stock picking and fundamental assessment that's happening.
Sure. The other piece of it, I think, that is a pretty consensus expectation is that deals of various kinds will start next year. I mean, maybe people don't talk about it so much, but IPOs are a tremendous potential contributor to hedge fund performance. And of course, M&A with arbitrage.
Exactly. And that's the view, that the regulatory environment next year is going to be friendlier towards the M&A environment, not just in terms of volume of deals, but also the left tail from deal breakage potentially being mitigated and being lower. And that should also lead to more optimism around the IPO environment. And exactly, hedge funds are active participants in that deal environment.
And just to circle back to the idea that, you know, an end investor has the choice between I will just ride the market with some proportion of my money, I'll have beta, and I'll seek to pay for alpha for some kind of a hedge fund strategy where you're differentiating. Do you not feel as if people say, look, the market's up 20% 2 years in a row, I don't have to worry about?
I think they can certainly say that. I think it's, again, what sort of headwinds do you expect? And do you expect dispersion and differentiation? You can just own the markets, or you can own the right stocks, and you can participate in shorting of stocks that could amplify some alpha to your portfolio. And that's what it is. If you look at your portfolio, if you want to have diversification in your portfolio, you want to have those alpha generation opportunities, and you want to be hedged when there does come uncertainty does come up. And especially, again, in talking to our clients, the tech sector is really interesting because beyond the Mag 7, we talked with your earlier commentator here that the breadth in the market is increasing. And that's, again, going to create some dispersion. And if you look at the supply chain, people are finding a lot of opportunities there. So, yeah, certainly you can own the market, but it's what are you anticipating for the future?
I mean, if you have a differentiated view about the AI investment cycle and you think that everyone's wrong, I mean, there's probably plenty of things to pick out. I took note this week that Ken Griffin made public comments suggesting that the multi-strategy hedge fund world is maybe peaked, maybe the interest is waning, or not that it's played out. Of course, he runs one of the biggest ones and most successful ones. But I just wonder if that matches up with what you sense out there in the market.
I think there's been a ton of AUM growth in that space. And it's, again, what are the alpha generating opportunities compared to cash rates and risk-free rates in the interest rate environment. And again, if it's an alpha-rich stock picking environment, do you need the hedged market-neutral portfolio aspect that those firms offer? And if so, how big of an allocation is it into your portfolio? I think when we speak to our allocators, it's less about do we need multi-strat or not, is what's the sizing, and that's the question.
And what about globally? Because you want to talk about dispersion. I mean, U.S. versus the rest of the world is incredibly split right now. So is there interest in there? Is it kind of people looking to kind of sift among the wreckage?
Yeah, I mean, TMT is a global story. Right? You look at the supply chain, and Asia is a big factor in that. So certainly TMT is a global story. Energy is a global story as well. If you look at in Europe, energy security and energy transition, again, while green energy and electronification as a sector is maybe not doing well, again, there's winners and losers. If you look at AI, you need energy to power AI, and that's a global story as well. In Europe, it's a valuation story. That's what our clients are seeing. And in Japan and Asia in particular, a lot of our clients are seeing opportunities for engagement and governance. And so you are seeing global opportunities and hedged opportunities. And so we think hedge funds are a great place to be.
And we seem not to be able to escape the crypto question. Does that even really come into play for the funds that you would look at?
I think our clients look at every opportunity from an alpha generation perspective, and it has to fit their investment memorandum, it has to fit their liquidity profile, has to fit the ultimate goal that they're trying to achieve. So it's case by case.
Yeah, okay. But probably not necessarily crypto only hedge funds, things like that. Mithra, thank you.